Good morning, buddy. Hope everybody's doing well. Good morning, Mr. Hedge Fund. Good morning. Good morning. Happy monthly OPEX, if you didn't know. Good morning. Good morning. No FOMO. I like that one. I like that one. Good morning, Sultry. Appreciate everybody for joining us. Good morning, Jeffrey. If you're just joining us, like and subscribe there on X and YouTube. You'll be notified when we go live or when we post any content. That helps us out, so appreciate it. No FOMO. That's a good one. Yeah, we'll get going in just a minute here. Let everybody file in. Awesome, no FOMO. Good morning, Shah. Well, at Game Edge, we try not to have FOMO, or we don't have FOMO because we have a great trading plan. So we let the market come to us. So, all right, let's go ahead and get started this morning. Thanks everybody for joining us. Obviously, it's Michael coming to you from Game Edge on Friday, January 16th. With our pre-market prep session, obviously, as everybody has said or I've said, we're heading into the monthly OPEX today. So we'll check out our three pillars. As always, here at Game Edge, we cover sentiment, structure, and trend, and then we'll cover individual equities at the end. Good morning, Will. All right, let's jump right into it. This is our market trend model based on the tick index. Obviously, the bolded white line is our intraday instantaneous CT. If you don't understand or know what the tick index is, you can research it at your favorite investing website, Investopedia, or any of the other ones, or Google, ChatGPT, whatever. But basically, it's just buying versus selling in the overall market. This keeps us on the right side of the market. We watch the overall trend. These shorter term momentum moving averages we call railroad tracks. If the bolded CT is above those and in a positive slope to the upside, then we want to be long and on the right side of the market. If it starts to consolidate sideways like it was here, or rolling back over into these railroad tracks or momentum moving averages, would be a little bit more cautionary. You can dial some risk back and possibly not put as much capital at risk in the overall market. And then if this turns back to the upside, then obviously we'd put more capital at risk. This is our longer term view here. This is what we call our colored ribbon. This turns our mechanical portfolios on and off. The red is above the cyan, and they're in positive slopes. So we continue to add to mechanical portfolios. We have some excellent trades we caught yesterday that will be closing this morning too. ASTS obviously was one of those significant moves to the upside. So check that stock out. I posted commentary yesterday about our intraday trading as well as our swing trading plan, as well as our mechanical P2PX and our wheel strategy also. So anyway, quick takeaway is bullish market to the upside via the colored ribbon, maybe some short-term weakness via the intraday instantaneous CT. Moving on to our trading view, market trend model. Obviously, you can see where we started getting that weakness into the afternoon, and we crossed below these ribbons and then started crossing below the moving averages. So it was a good opportunity to get short. This market trend model is a little bit more sensitive than our trade station model. Our trade station model is our back tested tag combo for our mechanical portfolios, but this is our intraday swing and day trading market trend model that we're using at the moment. So again, working very well. Good feedback from all of our members, and this code is in our Discord. if you'd like to come join us and grab it. All right, let's move on to the SPX. Obviously, the January OPEX is rolling off SPXA. As we talked about yesterday, we're moving into the February OPEX. We are call dominated below spot price. So mechanically, how we look at the overall structure in our web app is we go to the transition areas. We look at the transition areas, and if spot price is above or below transition, obviously 69.85 to the upside, 68.65 to the downside, and we're in the middle of a transition area now on the SPXA. So this is probably going to be extremely choppy. Call dominated just means that we have in-the-money call support below us. That should continue to be supportive on any pullbacks in the overall market. And then we have speculation to the upside, obviously towards that 70.50, 70.55, 7,000, obviously going to be really important to get over. You see net OI, 4,325 contracts there in the green. So call dominated there on that overall strike. You see COI there. That's the highest call sensitivity strike also. So if we get above 7,000, obviously price to chance to appreciate, but that 7,000 is probably going to be difficult to get over unless we have a significant amount of out of the money speculation come in via the SPXA. Now, remember, these are the cruise ships or the tankers, institutional positioning from the SPXA. So this does not change very much. So what we have here will only change slightly into the February OPEX. So again, a little bit of a wider transition, obviously. So within this overall area, we expect it to be choppy for mostly probably the month of February, unless we get above the 7,000 level and start to see the price appreciation. All right, moving on to the SPXP, denoted by the red arrow here, upper quartile turned on. We have in our web app, you can click this quartile. It lets you know the highest weighted total OI expiries. And so we have 78% picked here. We are put dominated here, but you see the net GEX is only negative 7,000 with all these expiries. So it's within the floor of noise, even though we are put dominated. And again, we'll go to the transition areas, 69.45, 69.50. Again, key areas to stay above. Implied open now is 69.60. I think we might have dropped to 69.50. But above that, we give an edge to the bulls. Obviously, 7,000 continues to be that bogey overhead, where the COI, which is call open interest, high sensitivity speculation area, it will be difficult to get above. And then to the downside, you see 6,900. So again, we could be trapped between the 6,900 and 7,000 back and forth, really for the next week or so past the monthly OPEX. Again, if one of these areas breaks to the downside, then we'd be a little bit more bearish this way, a little bit more bullish to the upside. And then again, staying above that transition area gives you your if-then statements for the overall structure. All right, let's move on the SPXP GEX ratio. Again, this is like a put call ratio, but we add a time component, which is short dated gamma. So this is more weighted towards short dated call gamma versus short dated put gamma. And again, you'll notice we're back above that one line. That's basically the balance point between the call speculation versus put speculation, bulls versus bears. And we have a positive slope there, which is good, even though we had a pullback yesterday in the SPXP. So we'll continue to watch this. If this turns to a negative slope and drops below 1, then we'd be a little bit more bearish, a little bit more cautionary, and most likely that turned a little bit more put dominated in the overall structure. But as of now, we're above 1, even with the SPX pulling back yesterday, and a slight positive slope heading into the day. All right, let's move on the SPXP delta balance. Again, we separate the overall structure to left-hand plane, which is the red dotted line. That's below spot price. That's all the speculation in the option structure below. That would be your out-of-the-money puts and in-the-money calls. The green dotted line is your right-hand plane. That's above spot price. That's your out-of-the-money speculation on the calls or in-the-money puts. You'll notice that's below 0. So that's a little bit negative. So the right-hand plane out-of-the-money speculation is not really present at the moment. And then the delta balance is the aggregate of the two. It's getting pulled down by the right-hand plane. So the right-hand plane is larger, pulling the overall delta balance down with this non-existent out-of-the-money speculation to the upside. Now, we do see this improve as we head into the 20th. Obviously, Monday is a bank holiday, and then we head into next week. So we do see this improve. Obviously, the left-hand plane starts getting back above 0. Right-hand plane jumps. So that's your out-of-the-money speculation. So we need to see that if we want spot price appreciation. And then that's pulling the delta balance up. So we could anticipate into Monday, possibly Tuesday, a little bit of weakness as you see this below the 0 line. And then we start pulling that slope back to the upside. So into the end of next week, speculation is coming back in to the upside. So again, we could see resume price appreciation back upward, or just at least a recovery from weakness that we might experience today or into early next week. All right, moving on the SPXP net stat command. Again, this is highest sensitivity levels. We've added these transition areas. So basically we like to refer this as where the dominoes fall. If you're above or below these key strikes, this is really important. So again, in the money puts, go to out of the money calls if we cross above 69.77. So you see that we're in the money put dominated here, in the money call dominated below us. We call that locked horns. It's going to be difficult for price appreciation to move to the upside or significantly to the downside. Obviously, left-hand plane integral, much larger, 6,900, continues to be supportive. So this is your transition point. You get above 69.77, we transition these in the money puts to out of the money calls, and we start grabbing more positive delta, which could allow us to move to the upside towards that 7,000 strike. You see the charm levels here, where our flip points are, our transition points here, 68.95, 69.93. Again, out of the money puts, as long as we're above 6,900, these will continue to be supportive as those puts decay. And if we're below 7,000, these out of the money calls, you see they're almost 2-to-1. So it's going to be a difficult push to the upside as the charm overhead will continue to grow throughout the day as these out of the money calls decay as time pushes on. Gamma, you see those important levels there. And then net Vanna, if we do see a drop in over volatility and out of the money calls come into the complex, you see we transition there at 68.95. So we probably push right into the 7,000 level and maybe push right through it. But we need to see two key factors happen. Volatility needs to drop, and we need to see how the money calls come in via our intraday speculation, which is our vol M command. And then you see where Vanna transitions here, 69.93, again, from out of the money puts to in the money calls. So if we move above that level, then we'd be grabbing more positive deltas we just talked about, and then 68.95 is that level there. So continue to watch this net stack command throughout the day. Again, these transition areas will be extremely important as we head into the overall structure and how we navigate the structure for today. All right, let's move on the SPXP 0 DTE. We are put dominated. Now this has been flipping back and forth. You see the net GEX is negative 100. It was plus 200 depending on where spot price is. So pre-market, when spot price was pushing up, we were capturing more of these positive deltas. That was pushing this net GEX obviously more positive. We're dropping back down. If we get below the transition, this will be more negative. That will put you in a little more put dominated territory. So that tells you really we're at a balance point, transition point within the overall structure. If we're below transition, we'd be negative for a move down towards 69.20, above transition, positive for a move up towards 69.80. Resultant, then COTMC, and then 7,000 would be where it'd be looking for. Drunken Sailor range, highly choppy today, low exposure OI. That'll be driven by the intraday call versus put speculation. And then again, your transition areas are your secondary trading points for today. Again, it's monthly OPEX also. So if you've had a great week, a past couple weeks heading into January, maybe just don't do much today. Manage risk. Take some of your capital off, wait for Monday. It's a long weekend. You'll have theta decay over the weekend, possible weakness into early next week we just talked about. So maybe you just sit this one out, take an early weekend, take an early long weekend, and come back refreshed and renewed next week, because this could be extremely choppy today with this fairly balanced and really no directionality heading into the open. So hopefully that helps everybody. Let's go ahead and look at the trading view chart. We'll go ahead and jump to the spread-X here really quickly. So we're sitting at 69.57. So let's jump back to the SPX. So heading in now, 0 DT transition, I've already labeled that. So 69.57 will be slightly above it. And then for top of DS, we'll be looking at that 69.70 area, and above that, 69.75. But again, chopping around this transition or retesting that transition at the open is a highly likelihood possibility. And then if we drop through the transition, we'd be looking for a move back down towards 69.20. All right, covered a lot of content this morning. Join us at gameedge.us, newsletter. Put in your email, you'll be delivered beyond the bell. Check out our free courses, Game Edge Fast Pass, flagship options course, and then our blog, Extensive Education here. And then click on the pricing tab. You can come join us in our Discord, 14-day free trial, all the tools turned on. So individual equities, I'll be happy to go over those really quickly. If anybody has any tickers they want to go over. Again, we're heading into the monthly OPEX. So after this monthly OPEX, obviously positions are going to change for a lot of the tickers. We'll check those out past this OPEX. I'll just go ahead and go to the next Friday's OPEX on Meta. So call dominated above and below spot price. We look at the transition area a little bit wider. You're at the bottom of transition. You do have call speculation here all the way up towards 650 for next Friday's expiry. Supportive on pullbacks to the bottom of transition, but once we get through the bottom of transition, could be a little weaker as you see you start capturing those net OIs, those out of the money puts there. Let's look at the top quartile. So the top quartile is actually put dominated. So when we add in the most, so this is important here. Yeah, thanks, Butch. You have a great weekend too. So when we look at the top quartile on Meta, next Friday and the end of the month is actually not even in the top OIs. It goes out to the February OPEX. So this gives you less weighting that I've just gone through on those expiries. So make sure you understand that. So let's look at the top quartile. So when we add all those in, that has the highest weighting, 72% here. We actually flip to put dominated. You're at the bottom of transition. You have significant overhead headwinds here via charm. And then you see those obviously out of the money calls overhead. That will be a charm. Now pull back down into the 600 level. I think should be supportive and stabilized. But upside appreciation on Meta is probably going to be difficult. All right. And that's why we do that quartile look there. All right. Let's click on this. So we'll go to the 23rd, which is next Friday. So it's call dominated. Tesla looks good. Move up towards 460. You're in the middle of transition, so it could be choppy. Let's click the quartiles. So then you see that removes all of those to the actually February OPEX. So none of these really matter for the weighting there. So we're call dominated. You're at the top of transition. 450 to the upside looks good on Tesla still, and supportive on any pullback. So it looks good there. Hood, yeah, let's look at Hood. I haven't looked at Hood for a while. So this is your top quartile. Obviously, this expiry. So we'll take this expiry out, and then sorry about that. Invert. Oops. Let me go this one here. Let me click this one off. There we go. All right, so we'll take this Friday's expiry out. So here we go for the top quartile. Call dominated on Hood. Top of transition looks good. Speculation up towards 135. Call speculation ramping up. It looks like 118 would be the first hurdle. 120 would be the next hurdle. And pullback should be supportive. So Hood actually looks really good. I like the look of it. SLV. Yeah, let's take SLV. So let's do top quartile. And then we'll remove this expiry. Call dominated. SLV looks great. You're already above PGEX though at 80. I think we talked about this. Upside speculation was probably going to be difficult on SLV. Pullback looks good, but upside speculation, you do have call speculation to the upside and you're call dominated, but it's not significant at the moment. And then 85 to the upside, you're already above PGEX. So historically, that's an area where we see some monetization. So Netflix, let's look at that one. Next Friday's call dominated. You're within the overall transition. Let's look at the quartile. It's much better. So you're call dominated, but upside speculation looks like it's probably going to be difficult. We'd have out of the money calls, but 89 is PGEX, absolutely user. So that's historically where we see some monetization. And then you do see net OI controlling the complex here, but you see significant charm overhead with those out of the money calls. So I think that's upside appreciation on Netflix is going to be difficult. So NVIDIA, yeah, let's check NVIDIA. NVIDIA still looked good, I think. Let's check the quartile. Call dominated. We're at 190. Let's see. You're above transition, so everything looks good there. 197.50 to the upside looks good. Let's look at next Friday's expiry. So the structure advances towards 195, even though it's not in the highest OI. And then 200. So within the next shorter term time frame, again, not a lot of the expiry on the OI. It's only 2%. But then we add 5% there. So 195 to 200 upside speculation looks good. But when you add in the quartile, overall 190 is still the top of that. And then 197.50 is COTMC. So NVIDIA looks good. I would just like to see the higher weighted expiries move that structure up a little bit for speculation. So Amazon, 240 to the upside, call dominated on all the quartiles, looks good. Pullbacks look good. Amazon looks good for significant upside. Let's look at next Friday's expiry. 250 on next Friday. Let's add in the end of the month, 250. So upside speculation towards 250 looks good. Again, like I said, on the quartiles, though, I'd like to see you see these 23rd, 30, 6th, and 13th are not in the highest rated quartiles. You're just at the expiry for February. So when you go to that, call dominated and 250 to the upside is where I'd be looking on Amazon. So, all right. All right, let's check back pre-market price here and see where we're at. Oops. Net, please. I'm not sure if we have. Let me check net. The OI on net may not be high enough. Maybe it is. Okay. Let's do top quartile. Call dominated. You're at the bottom of transition. 190 to the upside. Trading NWA. So that'd be where I'd be looking for net to appreciate to. 192.50 on that expiry, add in the 30th expiry, and 192.50 to the upside. We actually get put dominated towards the end of the month, though, so upside speculation is probably going to be difficult on net. 187.50, 192.50 is where I'd be looking for it to go. Pullback should be supportive, though. So thanks for joining us trading in NWA. And Soltry, thank you for joining us. Haven't seen you guys or gals post before, so awesome. All right. Thanks, everybody, for joining us. Make it a great weekend. Again, long weekend, monthly OPEX. Wait for the opening range. Be patient. Maybe not even trade today. And then come back in next week and start positioning on Tuesday for the next OPEX or for the weekly expiry. So absolutely. Thank you, everybody. Nick, thanks for joining us, Nick. Again, like and subscribe on X and YouTube. Share our content, please. That gets us, the algos ramped up and moving us to the upside. And all of our development within our Discord is member driven, and all of our funds and time and energy go back into development. And we want to make this the best member driven community we can with education. And the Game Edge team is in the trenches trading with you every day in the Discord, answering questions. We're real traders. So we're not just throwing the tools at you and saying, hey, go figure out how to use it. We're in there with you and helping. And then open mic on Sunday nights. Come ask questions. It's open to everyone. You'll see us post about it, even if you're not a member. So we appreciate the interaction and questions. So, all right. Thanks, everybody. Manage risk as always, and have a great weekend.